Okay, so now you can start.
You have made me announced?
Yes, I have.
So, right. So, good evening, ladies and gentlemen. I want to believe you had a good day in whatever activities that you undertake for a living, and also in the market, trying to practice and doing all that we need to do. So, as coach has done the introduction, we are still on where we began. We are still there because we believe that if we don't get this one right, it is a very foundation of this trading strategy. And if we don't get it right, then it will be so difficult to build on the next steps that we have to follow. So it may look tedious. It may look sometimes you are not. It may be that it doesn't really look like it is making any sense. But for now, let's just put our energies into it and get the hang of it, and eventually we will be able to see how things come together really to measure up. So I want to welcome you to today's class, and as you can see, there still the swing trading trend following strategy for you AUD USD pair. Now, why AUD USD pair? This strategy, it has been tested over some time. And as you all know, different pairs in the market, they behave differently. The way AUD USD behaves is not the same way Euro USD behaves. It is not the same way that GBP USD and other pairs, how they behave. So this one, it is particular and specific to AUD, and sometimes also it applies later on. We'll also be introduced to USD JPY. It also through back testing in the past, it has also been found that it also obeys the rules of this strategy. But particularly the pair of interest is AUD USD because it has proven that it is the most productive with this strategy. So I thought I should clear that here so that you don't think that this, at the end of the day, that you can use this strategy just for another pair. This one is specific to this. And later on, as you get deeper into the whole thing, you will probably come to realize. And perhaps also when you'll get to do some back testing at some point for yourself, even for the other strategies, you'll be able to see the difference. So now we will be going to through this, and basically we'll be recapping. Today's my strategy today is that at the end of it, we will want to go through the chart that you guys have been struggling with. Yeah, the chart that you've been doing, and at this juncture, I will want to say that still there are some people who have not submitted anything. I can see on board we are over 20, and you can be sure that the charts that you have received, they are less than 10. Yeah, ladies and gentlemen, this thing must be, we must, all of us, play our role. There's no way we are going to teach this thing here and you get it if you don't practice, for a fact. Yeah, so that's why we thought that this assignment should be taken serious, and you make an attempt. We know it is a struggle initially. We have been there, and we know it may not add up, but at least show that you are making an effort to do something. You know, if we just keep on looking at the screens and without doing anything, unfortunately, we will not be gaining much. And again, when we started, we set our ground rules, and we said one of it is that we have to be doing the assignments and submit them in time, right? So I need to remind each one of you that let everybody play their role so that we can all be able to achieve the objective. Otherwise, we will be at this and I will not achieve the objectives that we all want to achieve. Otherwise, let's delve into what we must do. And as a recap, yesterday, Ken did take us through the market structure once more. Coach a day late very well the groundwork of what we are looking at in the market structure. And this being a trend following strategy, it means that you must have an idea where is the market as at that point in time that you really want to get into the market. Is it going up? Is it on an uptrend? Is it on a downtrend? Is it ranging? Yeah. So those are the various transitions that the market transitions from. Either it was trending, then it reaches a point where it consolidates, it starts ranging, maybe, or it is going down, which is a downtrend. That you are, and the beauty with that is that you can see it with your eyes. Yeah, with your naked eyes, you can be able to determine, is this market going up or it's coming down, right? And of course, with naked eyes, and though even with naked eyes, sometimes it may not be possible, dependent on the time frame that you go for, right? If it's and some guys are still working in relation, yeah. I think I will admit the last one. Whoever comes next we will be locked out, right? As I was saying, depending on the time frame, a market which is going up, I'm sure you guys, if you have been in the market, you have seen it. In the lower time frame, you may not be able to establish the trend. You cannot. It is not possible, or it's not possible to establish the trend of the market in the lower time frame. Like for instance, 1 minute time frame, 5 minutes, or even 10 minutes. When you look at a chart for 5 minutes, you might find that actually at that it is showing you like it's going down. But when you go to a higher time frame, you realize that the longer term trend, it is actually going up, right? So here, remember, we are using 1 hour trend, 1 hour, and that is relatively a high time frame. You know, when we are scalping, we are using 1 minute, 5 minutes. That at that level, that's a lower time frame. That's what you're using for executing trends. But now here we are using for trending, we are using 1 hour. Therefore, then the market with the naked eyes, you can be clearly, it can be able to give you an indication whether it is going up or down. That's why the time frame of choice is high time frame, so that you can be able to see. Now, as you begin marking your chart, you start, that is now, well, let's start look at on the side of the highs, because highs, it's of interest to you for marking the highs, where before you start, and as you enter the market, when you look at the previous trend, the market was going up, right? So your point of your entry now, we want to look at then, if it was an uptrend, which is the highest point at which, as the time that I'm entering the market, which is the highest point in that in that current trend that you are entering into, and we are assuming in this instance that it is an uptrend, it was going up. Now, the uptrend, while on the top there, what you do, what happens is you look at the highest point. That is where you will mark, you'll mark your high. Then now after marking your high, that is the point of entry. Then now you will have to go down. For you to establish which is because that is the highest of that particular impasse. You will want to go downwards to establish the low. That is what we call current low. Of course, it remains current as at that point in time. As you move on to mark to mark the next either high or low, what was current stops being current. Now you establish a new high or low, and that becomes current. That's why you keep moving with the market as it moves, because you keep following it as you mark and as you establish the highs and the lows. So when you're marking the highs, you start with marking the highest point in the current trend, and you consider the highs of a series of candles in an uptrend until a counter trend candle appear in order to mark the start and end of the impasse. What do I mean? Having marked the high of that impasse, you want, of course, to establish then what was the low of that impasse. Yeah, what was the low? Because an impasse must have the low, which marks the current low, and the high, which marks the current current high. So how do you do that? here you move down. We will go to do it practically. I'm just recapping because these are things that we had mentioned. When we go there, I will revisit this as I show you know exactly what I meant. You consider the highs because as you are moving up, one candle moves, then it closes. Another one moves above it, it closes. It moves above it until it reaches the peak. But down there where it is coming from, it had a starting point. And the starting point was the point at which there was no successive, higher and higher. You reach a point whereby it was actually that pattern was broken, and that is what we refer to as the counter trend. When a counter trend, in other words, whatever, a candle that is going against that trend, that is going in the opposite direction, then that is where it breaks that trend and therefore establishes the low where to begin, right? So an impasse, as we had been told, an impasse will comprise of at least 2 successive candles in the same direction, and that is important. We don't usually have an impasse of one candle. Meaning what? An impasse will have to be at least 2 hours, because remember we are dealing with a 2-hour chart, and therefore each candle represents 1 hour. Each candle represents 1 hour. So within 1 hour, it is too short it is so short that to be able to tell you anything meaningful about the trend. And remember, our key interest here is to establish the trend, which direction that the market is moving, because we want to catch it early as it starts. If everybody was somehow was using some magic, was able to establish when the market is starting, right at the bottom, where the market is starting, and to know beforehand that it will move in that direction, consistently, it will move maybe about 100 pips. Who would not be successful in the market? Yeah. If you were that certainty, almost 100%, this is the point at which it is starting. And I will move with it. The trend that I've entered, even if it goes and it comes down, it will not break the trend. It will just retrace a bit, and then still it continue until it hits the 100, until it hits the 100 pips. Everybody would be very successful. The market would be very lucrative for everybody. But unfortunately, that is a secret that is never known by everybody. And that's why we have a strategy like this tries to establish a formula that can give you with a certain degree of probability that you can enter the market while it is starting whatever. It is starting a trend at the bottom of it. You can be able to enter, and then you follow, you'll be able to milk the market as much as you can. That is basically the thinking behind it. So an impasse should comprise of at least 2 successive candles. That is what will create an impasse, and they should be moving in the same direction. If it counters one, counters the other, then that cannot be part of the same impasse. They should move in the same direction. Right. What about the downtrend? Now, the downtrend is basically the opposite of what I've just described for the uptrend. You start with the market. That is, as you enter the market, when you look at it, at a cursory look of the chart, you can see that the market was coming down, and that's the point at which you are entering. So you want to establish what is the low, what is the immediate low, what is the current low first, because when it's going down, the low is usually obvious. When it's going up, the high, the current high is obvious. You can't miss it. You really, with your naked eyes, you cannot miss it. That's why that becomes the beginning point, so that now you can move backwards and establish then if this was the low currently and I can see it, then so which was the high of that impasse, and then you move backwards, and now going upwards. For this, you look at you consider a series of candles in a downtrend until a counter trend candle appears to mark the start and the beginning. So basically, it is the opposite. Yeah, you mark the lowest, and then you look at the series of the candles as how they're moving upwards. And now you're looking remember, when you're going up, you are looking at the top of the candle. that they are moving. It's each lower high, lower high, lower high until that series breaks. Then for the downtrend, you are looking, you know, the lower part of the candle is actually what you focus on, such that when then it will break, then that will happen at the point at which there is what we are calling a counter trend candle, Yeah. So the market basically, it does not move straight in a straight line. It does not move from point A to point B, C, D in a straight line. It moves, it comes back. It moves, it comes back. They are waves. They are what we are calling impulses. They are waves, so that and consistently it keeps building on those waves, and then in the long run it establishes what we are calling a trend, either an uptrend or a downtrend, and that is the starting point. So that then now we can be able to establish what exactly at which point we are supposed to. Because if a trend is going up, you want to go and catch the market when it is turning. Even if it's going up, it does not go up to the heavens. It will go and it will exhaust itself. Yeah. The buys will be, the market will be overbought. Therefore, now the sellers take control, and then the market will start turning somehow, right? So you want to catch it when it is turning, and be able to ride with it downwards. Ride with it downwards and make your pips. And when it's going up, when it's going down, you want again to exhaust it, to follow it to the end that it has been oversold. When it is oversold, now it will definitely, the obvious thing is that it will start, it can either start wrenching, yeah, or it will spring upwards. In other words, it will start an uptrend. And therefore, when it is starting the uptrend, you want to get into the market. When it is ranging, you don't want to get into the market, because there, the probability of you incurring losses is much higher than probability of you really making any profits. So you really want to get to enter the market, and it is the market which will tell you which is the best time to enter. And that's why we are marking highs and lows. That's why we are looking at highs and lows. I hope that you understand, you're understanding the theory behind all that we are, why these highs and lows. Because if you don't understand the essence of it, then it would look like just something that is abstract, and we are not dealing with abstracts here. These are realities, and you have to see them clearly for what they are. Now, having said that, today we'll mostly dwell on the chart. We will walk through the chart from point A to point, that's from the first day to the last day. We will walk through it, marking it, and you will use whatever will be recorded after what we have done. Then what we'll have done, you will use it. You have a whole weekend ahead of you. Tomorrow, the whole weekend. You will use that one to revisit what you did and compare and see whether you did the right thing. And where you not do the right thing, you are going to try to polish it and try to make it look like what will have been recorded, right? So there are those who probably will be wondering why we are not marking. We cannot be able to mark. There are many. But basically the feedback is important. When you look at it, we're able to see exactly how guys are faring, and it informs us. So you will take it upon yourself to mark your own chart. Using now, you can use it as a mark sheet. What will be recorded to be like a mark sheet that you'll use. Okay, so please just take your time over the weekend to go through it, because we will go through it together now. There will be recording, and you will be able to see exactly where we are coming from and where we are going. That is very important. Yeah, Kevin, we agreed that we must be coming on board in time. And it looks like you are a perpetual latecomer. Yeah, let us keep to the time. We will not be admitting people are coming late, the latecomers. Okay, now Having said that, we have about 10 minutes. When we go start marking, I want us to do that, to start that session when we re-enter the market in the next, when we re-enter the market after the expiry of these first 40 minutes. We have about 10 minutes. And for that, I want, before we enter, I want to do something so that when we come back, we will just go straight into the markings and following the marking the highs and lows, right? So then I will want to share something else here. This is I want to share my C trader. I don't know whether most of you, I don't know which platforms you are using, but I will use the C trader for demonstrating what I want to do. So it is not different from the other platforms. If you have other platforms still, you can use them, but for this one particularly, I want to use the C trader in doing the thing that I want to do. So let me share my C trader. I hope I'm visible. You can see my chart, C trader.
Yes, we can.
Yes, please, let's communicate. Let's be free, by the way, to ask. You'll be free to ask a question at any point as we move on, because it will be important. Now, while we are at this C trader, I want to, this is my current chart for AUD USD, right? So now I want us to go. You can see, follow me. Where I'm clicking. Huh? At the far end here, there is this where my cursor is. There is an icon there. This one is for automation. Okay. If you click on it, it will bring you to this this page here where you can do back testing. You can see there's something here known as back testing. So this one, it is you can use it for back testing or for looking at the chart you make it like it is live. You can be able to run like the way the trend view it works. You know, and that one is a subscribed version of a platform. But this one here, you can still use it for the same purpose, though it has its own limitations, but you can still use it in a similar manner for back testing. That way, instead of marking a check, marking a chart that is already, you can see from the beginning to the end. This one, you can start like from the very beginning and you let the candles to move along with you. So while we are here now, I think I want us to do something for you to activate what you want to do. Like now, you will come to one of these. You can see where my cursor is. My cursor, where it is, everybody can see it?
Yes, we can.
Yes, we can.
Yes. Right. So you just click on it on any one of them. For instance, you click on any of the seabot, like the Sambu Harai. By the way, this platform here is usually used for those who make this expert and advisors for C trader. This is where they come to do their testing and even to launch them to start trading. This is the platform. I know you guys have not been using it, but now I want to bring it on board for the purpose of knowing that there's a platform that you can use for that kind of for back testing or rather for marking our charts and following the market. I find it helpful, and that's why I thought I should introduce it to you guys. Maybe you may want to use it because it's what I want to use now for us to move along together. Right. So once you click on it, you just come here. You click on this plus here, add instance. Once you add an instance, you come and choose the pair your pair of choice. That is like USD, AU, USD, right? Once you choose it, it is 1 hour. Of course, here you make sure that it is, because we want a chart for 1 hour. you can change this one. If you click on the arrow there, you can change the time frame as it were, or even even the whatever, even the currency that you pair, you can also change if you so wish. But since our interest is AUD 1 hour, so that is the one that whatever, and it is the one which is are displayed there. So let me remove these markings here. Sure, you know what they are. They are the daily maps, previous trades that might be taken, how they performed. So this is now the AUD USD as it were. It is the current as it's going. But now you come here, you click on back testing. Once you click on back testing, it brings you a blank space. So while you are at it, you click, there's this visual mode here. Click on it. Once you click on it, now you have activated such that when now you will start playing the duration that you'll specify and which you're going to. So our chart was starting from when? Our chart is supposed to start from when? The one that you are doing assignment?
12 July.
12.
12th of July, isn't it? It's 12th of July?
Yes.
Right. So that is it. That's where it begins. Here you have to specify. Then where it ends on this other hand, right? You can see where my cursor is, I want to believe. Okay.
We can't see your cursor.
You can't see my cursor. Let me get an highlighter here. I want to see whether it can work on this chart. Okay, it's where I changed my date on the far end, or on the other hand. Okay, there's somewhere I've clicked and there's a drop down. Are you seeing it? A calendar drop down?
Yes, it's visible.
It is visible. All right. So please mark those steps because I'm sure you'll want to do it at your own time to follow through. But it's recorded. You can always refer anyway. So here again, now you come and now you choose the day, the end date, which is July 15. Is it 15 or 16?
16.
16.
16. Good. So that is it. Now what you have done is that you have specified the period, the duration of your interest. So when you click play, what the chart will only display that period. That is what will come on the chart. So here there's play. There's this arrow just next to where I've changed the date. There is an arrow there. That you click on it. You click on it and give it some time. It is to load. There it is. So once it is there, we can pause it. I have paused it. Now let's get a bigger screen. Let me minimize this. We don't need that. And we are about to, I'm sure we are about to be kicked out. Once we are kicked out, we will come back so that now we can get started. I wanted us to be there as by the time when we start now, we go straight into the backtesting bit. So while we are there, you can increase, there is, you can see where I'm clicking and there's a movement. Is everybody seeing that? I'm clicking at the, just where you can see, good. So that one, it now gives you the speed at which the candles will be moving, right? So I found 500 times 500 is not very